What's going on, everyone? I'm Cody Ashmore, and thank you for joining me in this video. This is a question I get asked quite a bit as far as like, why can I receive payouts from a simulated account? It doesn't make sense. Where's the money coming from? So on and so forth. I've even had some discussions with actually some very profitable traders that on their own personal accounts, but they don't wish to touch prop firms because they're not sure where that money's coming from. It confuses them, and to be honest, they probably just don't care because they have their own accounts. But nonetheless, that's their argument towards me, saying because they don't know where the simulated funds are coming from, and it doesn't make sense. Even when I explain to them, it's probably coming from evaluations of losing or unprofitable traders and fees, and so on and so forth. But so back to the topic at hand is how and why is this happening? So we'll start with the why. The how is relatively easy in my opinion. Let's start with the why. So the way it used to work in the prop firm space, let's just say you used to be able to take an evaluation. If you want my free course on how exactly I get funded in 1 to 3 days, then click the link in the description. Inside, I'll walk you through everything that's actually worked for me, plus any of the unspoken concepts and some of the biggest myths around day trading futures that no one is talking about. And then you pass the evaluation, then boom, you'll have that's a really bad arrow. Now it's a cool arrow. Then you go to a live funded account. So in this live funded account, you can, lose real cash from the firm. But what was always happening was, well, traders would get funded in a live funded account, and then boom, they would blow the account, right? And that's not good. Is that good for the trader? Not good for the firm. And it kept on happening over and over. So you could have a lot of traders passing evaluation, got lucky or whatever, but as soon as they get in the live funded account, blow the accounts. So these firms started thinking, okay, how can we incentivize our traders at passing evaluation and they can still have a little bit of an emotional aspect to it to where they can take cash out. However, they can still lose the accounts, but not affect the actual capital, the firm balance of the firm, right? And consider another step in becoming a live funded trader. So that is where simulated funded accounts came into play. So if we go back and we kind of look now, what's the process now across pretty much every single firm there is now is, well, you take your evaluation, and then you go here, and then you have your simulated funded account where you take out payments and still lose the account where the firm will not lose cash if you lose it. And then boom, if you can pass that, then you go to a live funded account, right? So that makes sense. And I find it like the best way I could kind of think about this, if you think about it, like even ask yourself, when you are paper trading, how is your trading stats? Every time I talk to someone, they're like, oh yeah, my paper trading stats and performance is fantastic. But as soon as I trade my real account, I do horrible. I lose profits. Nothing's working. Nothing's clicking. So it's the same concept, right? You're the world's greatest paper trader, right? That's why they do good here. But then if they jump straight to here, then they do bad and lose the account. So that's why the simulated funding accounts came into play. Another way for the traders to still receive payouts and build themselves up without losing the firm's capital, and still another extra step to prove themselves that they could actually still trade right before the actual firm could lose cash on it. But that's how it's happening. If you think about it, a lot of people are the world's greatest paper trader. As soon as they go live, emotions step in. They start cutting their runner or their winner short, letting their losers run really far away, and then over leveraging emotions, so on and so forth. See there it's going. It really does make me think of so when I started trading in the prop firm space right in 2016. Just a little bit of backstory for me, like the process for me to get to my live funded account with this firm was I was in a what do they call it, a simulator. I was in a simulator first, where I took all the charts of the last 20 years. It took away the ticker, even changed the price of the stock, and so you just traded pure price action. You had to do 250 trades there. After that, you had to literally type up and develop a trading plan. After that trading plan was developed, you had to paper trade that trading plan for 2 months. And then after that, you would submit that to your mentors, and then they would evaluate your trading plan. with your trading performance to see if you could actually follow that trading plan and what was the performance of that trading plan based on you following it. So that is why, or that was the process there. And then after that, you would get your funded account if the stats met the benchmarks they were looking for. So after that story came down to, or so after you accomplished that, it came down to a meeting with the head trader, and he's like, okay, and this is what he said. He told a few of us this. He goes, all right, so now you're going to go to the live account. Congratulations, you worked hard to get here. You deserve it. But I'm gonna tell you, a lot of you are going to start feeling the emotions. You did really good paper trading, but as soon as you hit that buy or sell button on your live account, you're going to start feeling the emotions. You're going to start letting your losers run. You're going to over position size. You're going to start breaking your trading plan. So don't do everything you can to not break it. And then some of us still stuck around, and others people never made it past that point because once they got to the live funded account, they would not make it. They couldn't follow their plan. They didn't have the discipline to do it. But that's really what's happening here. I think you get the picture here that once the emotions step in the live funded account, prop firms are losing cash, so therefore they created the simulated funded account. And then as far as how are traders receiving payments from these sim funded accounts? Well, if you really go and look at it, a few months ago, Apex revealed that they were making $13 million a month in fees. $13 million. That is a lot of money. Some of y'all maxing out your credit cards and you need to slow down, is what it is. And develop your plan first before you start slinging your credit card around like that. But that is insane. So it comes from activation fees, comes from fees for evaluations, and that is where that simulated funds come from, right? So if a firm has, say this is a firm and its revenue comes from, I'll put over here, comes from the traders that are doing well in live funded accounts, comes from, we'll say evaluation fees, right? And that's a various amount. And then they come over here and then they have activation fees. And then and on top of that, there's like reset fees. And let's be honest, most traders aren't making it. So I'm sure most of the payments come from this. I bet some get funded and they blow it. And here, and that's where it's all the simulated funds are coming from, or simulated payments are coming from, is what I should say. So that is how it's happening and where it's coming from. So, but what are your thoughts? I want to know what you think. Do you have a negative outlook on getting paid from simulated funds? I personally don't. As long as it's hitting my bank account, I could care less where it's coming from. But that process makes sense. I mean, everyone's the world's greatest paper trader, but as soon as it goes live, things change. I mean, everyone watching this, I'm sure, can agree. But if you have any different thoughts on that, please let me know in the comment section. Other than that, everyone have a fantastic day, and I'll see you in the next one.